Hey, what's up, crypto community? It's your man, Mr. Solution. So on today's episode, we'll be looking at a beginner's guide to FTX Leveraged Tokens. All right, but before we proceed, I wanted to say that if you have any question, any issue you want to be cleared on concerning cryptocurrency, concerning trading, you can reach me through any of my social media channels, my WhatsApp, my Twitter, and then you can equally join my Telegram group where I share deep insights, fundamental and technical analysis of some coins, which are mainly on FTX exchange. All right. So also please note that this training is 100% sponsored by FTX exchange. All right. They are my number one exchange currently. Is the exchange I've been using for since this year, so to say, for months now. Right. So in case you don't have an account yet, I'm going to leave my referral link at the lower section of this video, at the description section of this video, so that you can sign up and then join my Telegram group for deep insights. All right. So, and also please know that I am not a financial advisor. Whatever it is you'll be learning here, please take it with a pinch of salt. No man is infallible. Okay. So whatever thing we'll be doing here, just know it's for entertainment purposes, for entertainment, and also for education. All right. So let's go ahead. So these are the areas to be focusing on. Looking at what are FTX leveraged tokens. We consider how FTX leveraged tokens work. We also know how the FTX leveraged tokens rebalance. We only look at the risk. Okay, if there is any risk, do you stand the risk of liquidation when you're trading the FTX leveraged tokens? We also look at the advantages of FTX leveraged tokens, and then we look expansively in the risk of FTX leveraged tokens. And then finally, I'll be sharing with you guys my thoughts about leveraged tokens. So first of all, what are FTX leveraged tokens? All right, so you can define it however you want to, okay? But here, I would like to say that leveraged tokens are innovative assets that give you leverage exposure to cryptocurrency markets, all right? They give you leverage exposure to cryptocurrency markets, just the normal way you want to trade leverage, okay? Leverage tokens equally give you such an exposure, okay? So without all the nitty-gritty of managing a leverage position, okay, they also help you to understand some of the technicalities involved in futures trading, all right? But in this case, you don't have to undergo that risk of trading futures. FTX leverage tokens were first introduced by the derivative exchange, that's the FTX, all right? But since then, they have been listed on other exchanges as well, okay? So that what it means is that FTX is not the only exchange that currently trades derivatives, that currently trades leverage tokens. There are equally other exchanges that trade leverage tokens, but the number one exchange that brought it is FTX. Okay, so FTX leverage tokens are ERC20 tokens issued on the blockchain, on the Ethereum blockchain. Just as I said, they are ERC20 tokens issued on Ethereum blockchain. All right, so the idea is that you can get into a leverage position without having to worry about collateral, okay? You don't have to worry about collateral. You don't have to worry about margin. You don't have to worry about funding rates. You don't have to disturb yourself about liquidation. So these are the advantages that leverage tokens offer you. Because if you're trading a normal futures trading, you have to worry about collateral, the margin, the funding rates, and all that. And also you stand the risk of liquidation. But whenever you're trading the leverage tokens, there is nothing like liquidation. And also I want you to understand that FTX leverage tokens may lose significant value in sideways or a zigzag movement. Just know that these things don't move in a straight line, okay? You could lose value, but we still look at that when we consider some of the advantages of trading the leverage tokens. All right, okay. And then I want you to know that these leverage tokens are generally not intended for long-term holding. Please don't make that mistake. They are not intended for long-term holding. So make sure you understand the mechanism before exposing yourself to this financial risk. Make sure you understand how these leverage tokens work before exposing yourself to financial risk. And then I'm going to help you to understand how these leverage tokens work. Okay. So here I said, since leverage tokens are on a blockchain, they also allow similar functionality as other tokens. Okay, because they are built on the blockchain, they equally allow other similar functionality as other tokens. So what this means is that you can buy, store, and transfer them like any other token while having leverage exposure to the underlying asset. All right. underlying asset. Okay, so for example, okay, consider the bull. Let's look at these leverage tokens. How do you find them? You find them by, first of all, going to FTX exchange. Okay, I'm signing, this is my account on FTX exchange. So for you to see this leverage token, just go to this leverage tokens. All right, click on it. You can see this. These are the various leverage tokens. Remember that there are various types of them. We have the -1, -1x, -3x, positive 0.5x, positive 1x, and then positive 3x. We will still go down to understand how these things work. Okay, so once you log into your FTS account, go to the market section. From the market section, you'll be brought to this very place. You can see the various markets available. This is the futures, this is the sports, this is the volatility, this is the leverage token, this is special, and then this is the fiat market. Okay, so but currently we are looking at leverage tokens. Okay, so these are the various tokens. These are the various coins available on the leverage tokens. All right, so I'm trying to give an example. Consider the bull. Okay, let's look at it. We have the bull. Let's look at the bull. Let's search for it here. The bull. Here is the bull. Okay, bull USD. Let's look at the bull USD. Okay, and currently this token, this bull, represents a 3x long exposure on the price of Bitcoin. So what it means is that anytime you're buying this bull, is same thing as buying Bitcoin with a 3x leverage. Okay, so the bull represents Bitcoin with a 3x leverage. That's what we're talking about. Okay, so this is the bull. Okay, this is actually a daily chart. This is the bull. This is the bull token, bull leverage token. So what it represents is the Bitcoin with a 3x leverage exposure, right? Okay, so if the price of Bitcoin goes up 1%, bull goes up 3%. Okay, whenever Bitcoin increases by 1%, then what it means is that the bull, if you bought bull, the bull will increase by 1%. Okay, so and conversely, if the price of Bitcoin drops by 1%, the bull will equally drop by 3%, and then the bears will increase by 3%. Right? Please get it very well. Okay, let me repeat it. Let me repeat what I said again. I said if the price of Bitcoin goes up 1%, the bull goes up 3%, and then conversely, if Bitcoin goes down 1%, the price of bull goes down 3%, and the price of bear will go up by 3%. Let's look at this. Is the bull. This is also the bear. Right? So the bear equally represents the represents Bitcoin as well. The BRUSD. Let's look at BRUSD as well. Okay, so this is the BRUSD market, which represents BTC as well. So what it means is that anytime BTC drops by 1%, the bears will increase by 1%. But anytime BTC increases by 1%, the bears will drop by 3%. If BTC drops by 3%, if BTC drops by 1%, the bears will increase by 3%. Okay, if BTC goes up by 1%, the bears will drop by what? 3%. So it's kind of an inverse relationship. Okay, it does opposite of what bull does. Okay, the bear tokens here on FTS, they do the opposite of what the bull tokens do. Okay, so they have an inverse relationship, or they have a converse relationship, so to say. All right, so like I said, if BTC goes down 1%, the price of bull tokens will equally go down by what? 3%. Okay, so the inverse of the bull token is the bear token, which I just told us right now, which represents a 3x short exposure to the price of Bitcoin. I just told us about this bear right now. Okay, so they represent the 3x leverage exposure of Bitcoin. Okay, as such, if the price of Bitcoin goes down by 1%, the bear token will go up by 3%, while if BTC goes up by 1%, the bear goes down 3%. Okay, I want you to also understand that the idea behind any leverage tokens is essentially the same. There's really no difference. Okay, the only difference is in the tickers, the direction, and the leverage. Okay, but they are all the same. Okay, they are all the same. The idea behind any leverage token is essentially the same. The only difference is in the tickers, the direction, and also the leverage. Okay, so we've looked at how these things work, how they work as well. Then let's proceed. So we'll look at what we've actually looked into, what FTX leverage tokens are. And then the next thing is to understand how these FTX leverage tokens work. Okay, yeah, I said that I'm trying to let you know that each leverage token represents leverage exposure. Okay, so anytime you're buying any of these leverage tokens, remember that you are buying a leveraged exposure. Okay, and these tokens can be issued and redeemed through FTS, but can be traded on other markets like any other ERC20 tokens. Okay, you can trade it on other types of markets just as you can trade other ERC20 tokens. Okay, now let's say you like to issue $100 worth of ETHBU. Okay, let's say you want to issue $100 worth of ETHBU, the token that represents a 3x long exposure to Ethereum. Let's look at this. Let's go to the chart once again. Let's go back to the chart and look at this ETHBU. Right, so this is ETHBU. Okay, ETHBU here. Okay, this is ETHBU. Like we said, ETHBU is a 3x leverage exposure on Ethereum. Okay, instead of you trading futures with 3x leverage, you can simply go to ETHBU and then buy it. Maybe you will feel that Ethereum will increase. Okay, if you feel Ethereum is going to increase, you can as well buy ETHBU. So what it means is that anytime Ethereum increases by 1%, your ETHBU will increase by 3%. Conversely, if you're also trading ETH what it means that anytime Ethereum drops by 1%, your ETH will increase by 3%. Okay, so it's actually a converse relationship. Okay, so yeah, I said, let's say I like to issue $100 worth of ETHBU, the token that represents a 3x long exposure to Ethereum. Okay, so what you do is that you send $100 to issue the token, and the account that represents the token will open a $300 position on the ETH perpetual futures. Okay, please understand this thing. The mechanism is very simple. You want to open a $100, you want to open you want to trade this very ETHBU with $100. So what actually happens is that once you send it to this very place, once you send it here to buy it here, then there will be a 3x leverage opening on the perpetuals for Ethereum. Please understand this concept very well. It's very simple. That's just how this thing works. Once you send it to ETHBU to buy Ethereum because you believe Ethereum is going to increase, once you send your $100 to this very place, automatically the FTX exchange they automatically do it. Okay, they automatically open a 3x long exposure for you on futures. You don't have to worry yourself about that. What you just have to focus is this. So what I'm talking about and what I'm sharing with you guys is how this thing works. But we don't really need to go into all those, but just understand that this is how it works. Okay. So if Ethereum USD opens a perpetual market for you on FTS, now think of this account as a trading board that takes care of your leverage position for you. Okay. So anytime you buy this, let's say you're trading with $100. You send it to ETHBU, you want to buy ETHBU, automatically the boat, so to say, boat unquote, okay? So they open a 3x perpetual futures for you on Ethereum, on this FTX exchange, okay? So the account now has a $300 USD long position on ETH futures market, which is represented by 100 USD worth of leverage tokens, okay? So now, this same process applies not only for issuance, but for redemption as well. Similarly to how a stable coin can work, in theory, be redeemed for the value it represents. Leverage token can also be redeemed for the future they represent. All right, so let's go back to what we were talking about earlier. Okay, we were talking about how the leverage tokens work, which is what I'm trying to explain here. Okay, so you send $100 USD to issue the token, and the account that represents the token will open a 300 USD position on ETH USD perpetual futures market on FTX. Okay, so the token now has a 300 USD long position on the ETH USD futures market, which is represented by your $100 USD worth of leverage tokens. Okay, so if you just like to trade the FTX leverage tokens, you don't have to worry about the issuance and redemption processes. Okay, so what I'm talking about, the point I'm trying to make is that the technicalities when it comes to maybe opening and redeeming all those things, we really do not have to bother ourselves about that. Okay, so once you're sure of your chart, just go right ahead and then buy ETHBU or ETHBEAR, depending on your bias. Okay, depending on the direction your bias is tilting to. Okay, so So here, of course, if you like to trade the FTX leverage token, just like I said, you don't have to worry about the issuance and redemption processes. You can just simply buy and sell them like any other token, okay? So you don't have to worry yourself about the redemption and the issuance of a thing, okay? Just go right ahead and make your trade, okay? So in fact, the creation and redemption process is only recommended for advanced traders, okay? So you don't have, like I said, no need to worry yourself about the issuance and redemption stuff. Is only for professional traders, okay, for advanced traders, so to say. So as it can be a bit complicated, or like I said, that it's usually very complicated. So even so, understanding how the process works is important to be able to use the tokens more effectively. All right. So the next thing we're going to be looking at right now is how these FTX leverage tokens rebalance. Okay, rebalancing. What does it mean for these tokens rebalance? How do they rebalance? Okay, so here I said that we should understand how they work. Okay, now we've perfectly understood how these leverage tokens work. Let's also talk about how these FTX leverage tokens achieve the target leverage. All right, so how do they do that? Every day around 2 a.m. Okay, let me put here 2 a.m. That's CHC Central African time. Around 2 a.m., the accounts that represent the tokens rebalance. This means that they either buy or sell assets on the perpetual futures market on FTS to achieve the target leverage for that day, okay? So they actually balance automatically. You don't need to do anything. It automatically balances itself by selling the very coin you're holding, okay? Maybe you're in profit already. You could just take some of it to futures markets, the futures market of the very coin you're keeping or you're trading. Just take the profit, go there to rebalance and make sure that everything is stabilized, okay? So this means that they either buy or sell assets on the perpetual futures market on FTS to achieve the target leverage for that day, okay? So if they made money, they invest profits, buy to increase in their leverage. If they lost money, they sell some of their position to decrease their leverage. So what do I mean by this? Let's say you're buying you bought if bull. Let's say you bought it bull, and then maybe because you believe Ethereum was going to go high, and then if went high went high by, let's say, 1%, automatically if bull will increase by 3%. Okay, so let's say it went high to, okay, it goes high today by 3%, that's your if bull, and then tomorrow it equally goes up again by 3%. That means if increase an additional 1% tomorrow. Okay, so totally you'll be having like 6% increase on your if. But then this thing needs to balance. They have to rebalance themselves. So what happens is that profit you're making, they are taking that profit to the futures market, okay, to open more positions, more long positions for you. Please understand this concept is one of the areas that people don't really understand very well. As you're making the profit, those profits you're making, they are opening more positions for you on the perpetual futures market with 3x level. Remember, they open more positions for you on perpetual futures. Okay, that's it, with a 3x leverage from the profits you're making. Okay, but then unfortunately, let's say the coin goes up today. Let's say ETH goes up by 1%. That means ETH will increase by 3%, and then tomorrow drops by 1%. Remember that because it's increased by 1% today, there is actually an opening for you. They open more positions for you. So that means for it to drop again, that position they open is putting your account at risk. It's putting your money at risk. So because it goes that, assuming, okay, let's look at the practical aspect of it. You're trading with $20. Okay, let's put it that way. You bought ETH bull with $20 because you believe that Ethereum is going to go high, and then Ethereum increases by 1%, and then your ETH bull equally will increase, of course, by 3%. Now after today, tomorrow, okay, I remember that immediately that your ETH bull increased by 3%, they will open more positions for you on the perpetual futures. That means they will also use some of those funds you have, some of those profits you've made to open more positions for you on the perpetual futures market. Okay, so once that happens, that means you are now exposed more. Your money is more exposed. Then let's say tomorrow ETH now drops by 1%. You see what will happen? What will happen is that because you've been exposed the more, your funds will be more at risk. This is just the simple way of how to explain how these things work, okay? And also, I want you to understand that if you make money, they reverse profits to increase their leverage. I've said this thing, I've said it before. If you make money, they will that the profit you made, they will invest the profit to increase your leverage. And then if you lose money, then automatically they will sell some of your position to decrease your leverage. This is actually the reason why you can never get liquidated whenever you're trading the leverage tokens. Okay. Now, in addition, the FTX tokens also rebalance if the target leverage is considerable higher than the intended leverage. For example, okay, I'm just trying to give you guys an example. If ETH moves down 11% in less than a day, ETH will be rebalanced before the usual rebalance date to prevent liquidation. Okay, so it doesn't really mean it must get to that 2 a.m. stuff. It can happen automatically if there is a very high volatile move in the market. If the market moves in an unprecedented manner, let's say volatility just increased tremendously, it will just have to rebalance itself automatically to avoid liquidation. Okay, so this means that there is little risk of liquidation, like I said, as the token should automatically rebalance in times of high volatility. Okay, now before we go further, let me also reiterate the fact that under normal circumstances, the FTX leverage tokens rebalance once each day. So during times of high volatility, the FTX leverage tokens also rebalance to prevent liquidation. I say this. This means that the target leverage is achieved since the last rebalance, but not at all times. Okay, so as such, FTX leverage tokens might perform very differently from a simple leverage exposure, especially at times of what? At times of high volatility. Okay, so we look at the question. Let's try to answer this question. Are you at risk of liquidation? Okay, so here, why there is virtually no chance that your account holding this token is going to be liquidated, the tokens themselves could be on FTS. Okay, where there is really no there is no evidence. Okay, there is no guarantee, there is no possibility of your account getting liquidated. But you should also understand that that very token you're holding, that very leverage token you're holding, could get liquidated. We'll look at an example. Okay, so the rebalance process we discussed earlier can't account for all scenarios. Okay, so if the market instantaneously gaps down 50%, like if just like I said, let's say there is a high volatility that came into the market gaps down by 50%. Like by gapping down, I mean dropping. Market drops by 50% unprecedentedly. The tokens might not have a chance to rebalance. What this means is that it might take it a very long time to rebalance. Okay, like I said, it won't be liquidated of your token holdings, but they could experience extreme price moves. Now let's look at an example. Right, this is actually this 3x long Ethereum token. Okay, this is ETH bull. Right, this ETH bull, like I said, I showed us initially, this ETH bull, and then if you check, you can see that from here for a very long time. That should be around April or thereabouts. I can't remember. Okay, this was happening around March, when there was a that rapid drop, when the whole of cryptocurrency space witnessed that huge drop around March. Like this was happening in March 10th. Okay, so we can see this sharp drop. Now consider this drop from this very place. You see that it has actually not gotten back to where it fell from. So imagine you bought at this very place. Imagine you bought at this very place, and then up till now, it's even yet to get back to that very place it fell from. Okay, so this is what I mean by saying that your account might not get liquidated because it rebalances, but there is a 100% certainty that that very token you're holding could get liquidated. Can remember here, this is actually it was around $10,000 at this point. And then what happened next? It kept on dropping and dropping, and currently is around 461. Let's look at these charts. This ETH bull. Let's look at that ETH bull as well. Let's look at ETH bull. Okay, this is ETH bull. Okay, this ETH bull. This daily chart. Let's go back to where we extrapolated the chart. Okay, you can see here. This is where we got the chart from. You can see here. This on the 6th of August 2019, you can see that the price of ETH bull was around $10,000, and since then it's been going down. It's been on a steady downtrend, right? So that's what we mean by saying that your account might not get liquidated, but then your account might look at it. It's been dropping since then, and you can see how bad the market has been and all that. Okay, you can see. You can see how bad it is. So that's why we always say that you have to understand the risk before trading this leverage token. You can imagine someone that bought it here and then currently it's trading around 400 and that's $483. Currently that's $483. Okay, so you can see can imagine the risk and then the person money going. Remember, like we said, you can get liquidated, but then there is a possibility of that coin going to zero. Now let's also look at let's just look at Bull, which represents a 3x long exposure of Bitcoin. Let's look at Bull. I remember trading this Bull sometime last year. Yeah, you can imagine. Okay, this around the current. It fell from 6th of August. You can see how high the price went then. Okay, that was from, it fell from above 7,300, 73,000, so to say, from that 72,000 to the current $22,740. You can imagine that. Okay, so that's what we mean by saying that the token itself, the leverage tokens itself, could get liquidated, but your account won't ever get liquidated. Okay, so that's just the point. Okay, let's also look at bear as well. We've looked at Bull. Let's also look at bear. Let's also look at bear. Okay, bear USD. Okay, bear. Okay, you can see how it's been. You can see I actually sold sometime this year around May or thereabouts. I sold some at $1.92 or thereabouts. Okay, now you can see what the price. Excuse me. You can see that the price has actually been on a steady decline since then. You can see from here. Okay, it's actually started doing well and then you can see how it's been going. And then imagine someone that bought at this very point from $94, so to say. Imagine buying at this point and then the current where it's actually digging for crude oil, so to say. That is actually less than $1 currently. So that's what we mean by saying that these leverage tokens could actually get liquidated, but your account won't get liquidated. All right. So that's the point I was trying to make us understand. So let's proceed. Now, we also look at the advantages of FTX leverage tokens. Of course, they have the advantages. Now, the advantages they have is in the aspect of managing risk, okay? So managing risk on leverage tokens can be a daunting task, okay? Whenever you're trading the futures, managing risk on leverage positions can be a very difficult task. It can be very daunting, okay? But with leverage tokens, you don't have to worry about margin. You don't have to worry about collateral. You don't have to worry about liquidation. And then you even don't have to worry about funding rates. You can just buy the tokens and it's all taken care of. Just buy it. Once you're sure what you're doing, just buy it and then everything will be taken care of. That's the one advantage, or some of the advantages they have over features, over perpetual features. Now, an additional advantage is that since these tokens exist on a blockchain, you can move them between exchange or withdraw them to your own wallet. This makes leverage tokens one of the few ways you can hold leverage positions in a non-custodial way. So what it means is that you can actually buy these leverage tokens from an exchange and then send them to your ERC20 wallet. Like we said, they are all of ERC20. They are all built on Ethereum blockchain. So you can just withdraw them from the exchange, from the place you bought it, and then send them to your wallet. But remember what we said, that these coins are not good to be held long term. Because even though the account will not get liquidated, but there is a 100% possibility that that coin you're holding, that leverage token, could get liquidated. So you don't just hold for holding sake. Know what you're holding. All right. So now let's also look at some of the attendance risk. Okay, FTX leverage tokens, actually they sound great. So why not use them only instead of trading futures or margin? That's a $1 million question. Okay, so well, they are high risk products, just like I said, and they are fairly experimental. They are high risk products and they are fairly experimental. They're for experimental purpose. And then I don't think it makes sense somebody using his money to invest to buy experimental instruments. It doesn't make sense. So that's why I said it's not always good for you to hold them long term. You can just trade them for quick cash, but long term they are not good. Okay. So the main thing to consider is that over the long term, FTX leverage tokens will perform differently than a simple leverage exposure. Please understand this. Why does it happen? Simply because of the rebalancing that it undergoes every day. So because of the rebalancing process we've discussed earlier, the target leverage will be achieved for each day or since the last rebalance, but likely not over the long term. Okay. So as I mentioned earlier, FTX leverage tokens are not intended for long-term holding. I can't emphasize this enough. I can't say it enough. So it might be worth comparing an FTX leverage token's historical performance to that of a simple leverage position before entering a longer term trade. So anytime we want to trade the FTX leverage tokens, it's good you compare it alongside other leverage tokens, other normal margin of futures, perpetual futures tokens, so that you understand what you are up against. Okay. So generally, FTX leverage tokens tend to work more predictably when market momentum is high and perform inconsistently when the markets are in a consolidation phase. Okay, if the market is consolidating, they do perform inconsistently. But these two can vary, so it's worth going over FTS advanced worksheet. You can just visit the FTS website for you to understand this thing I'm talking about. I'm still going to drop the link at the lower section of this video, at the description side of this video, so that you can go to FTS exchange and then understand more how this thing works. Okay. So another thing to consider is that these tokens tend to be traded with lower volume and liquidity than regular margin of futures market. Okay. So these leverage tokens, they work with lower liquidity on more than the other futures or perpetual futures market. Okay. So finally, I'm going to be sharing with you guys my thoughts. And what is my thought? My thought is that the idea of programmable money has opened up new the idea of programmable money has opened up new avenues not just for gaming, digital collectibles and prediction market, but also for trading. All right. So leverage tokens are a recent innovation that lets you enter leverage positions in a way that's very simple and easy to understand. All right. So if you'd like to read more on FTX leverage tokens, I'm going to drop the guide for you to go through. All right. There is one point we skipped, and this is this. We talked about the funding. Okay. What are the fees? The fees you can pay. There's a 0.1% creation and redemption fee here. Then there is also a 0.03% per day management fee on leverage tokens. Then understand that this is just taken out of the net asset value of the leverage tokens. Okay, so it doesn't really affect your account. Nothing, you won't see an actual token balance decrease or USD charge in your account. It's not taken from your account. So half tokens have 0.01% per day management fees instead, because they are of lower leverage. All right, so thank you guys for sticking with me. I will see you in the next video. And please, if you are yet to subscribe to my channel, hit the like button, subscribe, and share this video to as many persons as you would want to partake from this. And then, like I said, you can join my Telegram group where we look at coins, we have deep insights, fundamental and technical analysis of some coins every day on our Telegram channel, Mr. Solution FTX. It's just one word, Mr. Solution FTX. And then finally, if you're yet to register on FTX Exchange, use the button below. I'm going to drop my referral link. Once you register, you can join our Telegram group, and I will see you in the next video. Thank you.